Factory.tech. And if you don't know, now you know. This is the place where we not only teach you how to trade, but we teach you how to build the algorithms that teach you how to trade on your behalf. So listen, you're in the right place at the right time, especially the way the world is going. The most amount of money and profits you're going to be making is going to be in a leveraged market, and we show you how to exploit it to the umpteenth level. And with that being said, you Cowboy, flash that QR code so people will stop thinking and start doing. Join us, algofactory.tech. Join us or die, as Darth Vader would say. Anyway, yeah, there we are. Scan that QR code. Let's get started. And with that being said, Cowboy, what's going on, buddy? How are you?
Oh, good, man. Just looking forward to the drips. I know that the audience is a bit thirsty.
Oh, it's heavy, man. It's heavy drips. I'm gonna probably need a full 30 minutes tomorrow. It's gonna be nuts.
Big. That's
it's a lot of shit, man. Woo! I don't want to get too much into it, but yeah, I'll leave it.
Well, Be Good asked a question, and I can tell you. Excuse me. So Be Good's question is whether...
Are you on your coffee break again? Are you going in your coffee fast where you don't drink coffee?
No, dude. Just actually, I got a late start this morning. I had about 20 minutes to get everything freaking. It was I don't know what happened, but I slept through the alarm. I don't know, or the alarm didn't go off or something. So the coffee hasn't had its effect yet, but I'm going to tell you about what. Okay, so Be Good's question, not to we're gonna just have a long, yawning, relaxing show here and just bore everybody to death. Be Good wants to know, can he at least give us an idea if this is positive or negative for the markets? I can tell you one thing, for almost certain, Be Good, is this going to be positive for trading? So now, if it's positive for markets? That's another story, because markets go up, markets go down. Most people who are in markets are looking for markets to go up, right? Because most people are not traders, they're investors. Most people are buying a stock and hoping that it goes up. Okay, so those are investors. If you're, they're very, with the exception of maybe people who are in, say, the penny stocks or something like that. Those types are okay. Maybe they qualify as people who just want something to go up. But even penny stock people short stocks. So what traders want is volatility. That's what traders want, volatility. For example, let's see if we can bring up some screens and demonstrate this for you, right? All right, so let me expand this, zoom it in, make it all very visible for you. You can see my alarms on the right there. Oh, I think I made 5 trades yesterday, won them all. And I'm not posting them because they're on my test algos, but so it's all kind of small trades, but I won more than most normal days trading at a very small, less than a quarter size position. So it's just, I won every single trade. It's great. So test algo seems to be going well. Now, one day of really good trading, and it's across different assets as well, different forex pairs. Let me warn you all against that kind of performance, right? So the market is an interesting beast, and it might be that you just have a lucky streak and you win 5 or 6 trades in a row. And it doesn't mean that you're going to have that kind of performance all the time. The next day you could lose 5 or 6. So what really matters is testing over time. Okay, that's a big warning. That's why I'm not thinking, I'm gonna get fucking rich. No, it's just not necessarily that way. Just because I had a good day doesn't mean that I'm gonna all of a sudden get rich. It just means that I had a good day. I have about 180 good days in a row. Then it's okay, this is a really good system. There's what you're looking at. And we talked about this yesterday, and we talk about this quite often. Moments of volatility, right, versus moments of consolidation. So there's trend and consolidation is another way to look at that. Okay, so what I'm drawing these boxes around are moments of consolidation, right, where the price just isn't moving that much. You have, and most of the market is going to be that way. The market trading is I'd say a good 70 to 80% weighting Unless you're somebody who's like making money on the churn, maybe you've developed an algorithm that goes to a low time frame. Okay. Most of the time, though, even on a low time frame, there's going to be needed some volatility to make money. And when you start trading the 5-minute, like I do, you start to run into issues with the spread. Even on on these low volatilities, like, well, if I just trade the low time frame, it's not a problem. These little tiny movements are big movements on the low time frame. Okay, that's true, except that the spread's going to knock you out. You still need a certain amount of volatility, right? And that's, that there's a lot of talk behind that we don't need to get into. But these areas that I have kind of delineated inside of these boxes, this is what happens when like the world is fine. Let's just say we were looking at, right now it's a 30-minute chart.
Hey,
so
could you pull up that chart, man? Whatever you're talking about.
Oh shit.
Yeah. What are you doing?
Well, that was slick.
Listen, you
Jedi. Get it all prepped.
Okay, you're not gonna project it into our skulls.
Well, hey, man.
Jedi Master,
or like I run like you're part of an MK Ultra experiment, and I have.
I'm a figment of your imagination.
That's
I have multiple personalities.
For everybody who just was trying to imagine what I was just talking about, here you go.
Sure.
So these boxes that I've drawn,
thank you,
are like where the market's not doing a whole lot, but this is on a 30-minute chart, right? So, but this is what it can. If I were to zoom out and show you years worth of price action or months worth of price action, you'll see like several days like this in a row, where you have these boxes where price is just kind of ranging. And now, mind you, you can make some money in that period. It's not like you can't trade it. But when you have these movements where for like a day or two, or like at least part of the day, you have these large kind of movements up or movements down, that's where the money's made in trading. Like that's, volatility is, price movement is what's needed. And to get to B Good's question here, when the markets have like big things happen, I don't know, for example, I'll show you a really good example. Let's look at gold really quick. All right, gold is the perfect example for this because we can actually see this concept in action. Go to the daily here. So each one of these candles is the daily chart, and to show you, like gold's been pretty volatile as it is, but you kind of have this, this sort of period of consolidation from here to here. Yeah, there's money to be made. Up here, down here, up here, down here. But now we don't ever want to see war. We don't ever want to see people dying. At least I don't. And I really hope that nobody who's watching this wants to see war or people dying. But this is what happens when you see war and people dying. Gold just gets extremely volatile. So a lot of money was made taking gold from 1800 all the way up to 2000. That's a lot of money being made. If you're a trader, it's just buy the dip for like several days. So volatility is where money's made. So is it good for markets? Well, it might be good for some markets. It might be not as good for others. But if you're a trader, it's going to cause volatility. And volatility is where the money is. So, and we do expect for there to be a lot of volatility. There's volatility now. It's the markets are relatively volatile compared to, say, like when the interest rates were sitting at 0 and just the stock market was going up. Yeah, you can make some money. You find where that money is. But if you look at the SP 500, that got real boring from a trading standpoint after a little while. Looking at ETRAV, ETRAV, I don't know. It might be that these guys sell and buy and sell periodically. That's just what they do. They have income. So a lot of times it might be that, that was a scheduled thing. I don't know. That's news to me. So I don't know what to tell you. That's maybe the gorilla can answer that, but let's see here. And he, by the way, he'll be back momentarily. He sent me a note. So we'll have to get that question answered.
What are you talking about?
Etrav asked, why is Jamie Dimon really planning? Is Jamie Dimon really planning to sell 140 million in JP Morgan shares? And I said, well, chances are
he's taking profit.
What's that?
He's taking profit.
Yeah, that's what these guys do. You gotta take profit every so often. But I think guys like that, they schedule that months ahead of time.
They schedule that years ahead of time.
Yeah, it's not
big withdrawals. That it's just it's time to take profit. It's a hell of a profit.
Well, yeah, and like guys, like say for like, okay, I don't know, I'm not saying this exact example is what's happening, but you know, Elon
I'll
Musk.
tell you right now, Jamie's not leaving JPM, so he's not like, you know, taking his golden parachute and getting out of here before the crap hits the end. Look, JPM is going to be the last man standing. People don't realize this. Back in the early aughts, okay, when this financial crisis occurred in 2008, the market collapsed. Guess who was doing all the Fed's dirty work with all the big security issues that are out there? Number one, okay, financially speaking. Also the bond issues, the treasury issues. There was a lot of crap. I mean, who helped clean up TARP? The mess that TARP created, who cleaned it up? It wasn't the fucking Fed. The Fed is an idiot. The Fed is filled with morons, right? Especially at that time. You had who? Bernanke? Right? We had Bernanke. Yellen was still around because Yellen is the Lyndon Baines Johnson of the Fed.
Yellen is the
that idiot's never had a real job in her real life.
She's not. She doesn't seem to be very intelligent at all.
She's not. She's a football with clipped hair. That's what she is. So in the 2008 financial collapse, guess who cleaned up a lot of the Feds, did all the Fed's dirty work? Who was the physician's assistant to the Fed's doctoring of the financial market that screwed everything up? At that time, it was J.P. Morgan. It was Jamie Dimon.
Yeah.
You know, so they're not going anywhere.
No.
They're strategically vital. Because here's the thing. J.P. Morgan cannot collapse because already the BIS has already claimed that J.P. Morgan is a geostrategically important institution.
Yeah, they're an SIB.
They're not going anywhere.
They're an SIB, strategically important. That's another way to put it. As far as like these guys taking profit, when you are someone like him, so you're like, I mean, I would almost call him a politically exposed person. I don't think he falls in that category, but long story short, like Elon Musk, right? Let's say he's got $100 billion in Tesla shares or whatever, or not billion, but let's see, he probably has about that much money. Let's say he's got 50 billion in Tesla shares. Just make a number up. I don't know what it is. Well, you know, it's like he's not going to keep it all in Tesla shares. I mean, these guys take profit, but I think they have to actually file months in advance, and you know, that kind of stuff is done like clockwork. Like, oh, well, we're taking profit this quarter. Stock is up, stock is down. I don't think it makes a difference. They're just taking profit. They're just selling stock. They're divesting from their own company just because, you know. So that's I wouldn't, you know, if you're scheduling something like, I don't know, 3-6 months in advance, I don't think it's like, you know, I wouldn't worry too much about it. Like, you know, $140 million to a guy like Jamie Dimon. I mean, it's probably a lot of money, but it's not going to make or break him. That's, you know, it's not like, oh, I need to get my 100 million out. Like, he's probably got a few billion, you know.
That's why you have a lot of guys in the alt media that would telegraph this as some sort of a, you know, conspiracy to get out because it's all falling apart kind of deal.
We got the Jamie Dimon's selling, you know, I've seen the white paper. Yeah, there's just, no, don't worry about
Well, I'll tell you right now. I've seen the white papers. And these things that the globalists do. It's Infowars.com.
Yeah, not throwing too much shade over in Alex's direction. Alex does.
I love Alex. I like Jonesy. We all cut our teeth with Jonesy, right?
It's so funny because, yeah, okay, so, you know, he might have gotten Sandy Hook wrong, maybe. You know, I mean, like, we don't really know if he did, although the court says he did. But
I feel opposite of that.
Yeah, I'm not convinced.
It, right?
I think
I'm not gonna
opine on that right now. But
yeah, I mean, the fact that the way the system responded.
Yeah,
and that's how you know if something's true is when the system responds in such a way. Like, we can't talk about a certain chosen people. You can't talk about a certain country in the Middle East that historically and ethnically and geographically should be part of the global South and BRICS, but for some strange reason, it's a Western country.
Yeah, no, it's
there. You don't want to talk about that one.
You can tell like who the problem is by telling who you cannot talk about. That's you can tell the problem. And you know, so Alex is probably, I don't know about Sandy Hook. I'm not saying anything about Sandy Hook, but I will say with Alex, he gets a lot of flack probably because he's over the target a lot of the time. I also think Alex is also probably in some shape or form captured, but aren't we all? So anyway, whatever. I think
I'm captured by you, man.
Yeah, I'm captured by your beauty.
You had me at hello.
You had me at let's go waxing. What? All right, so this is like an example of what happens with volatility. All right. So as a trader, this okay. Like looking at this, what do I want to trade? In this is the SP 500 going back to 2020, right? So there are two different like market models here. There's this model in the blue square, and there's everything after it. What do I want to trade? I want to trade what's after it, because this move up is nice if you have a 401k. It's nearly impossible to trade. I mean, look, you get the clue after a while. You just start buying each little dip, because this is on the weekly chart, right? But a little choppy moves up like this, that's difficult to trade. To be like a trader and actually make that money. What you can do, there's ways to do it. You develop an algo, and it's basically when something pulls back to value, you probably use a couple EMAs. Like, there's ways to do that. But here, look at the size of these bars. There's so much more like these long bars on the right. That's volatility. That's volatility on every time frame. On the left here, you're just having stocks inch their way up day to day. Here you having price moving up, moving down, making some real moves. This in the SP 500 from January and through say February of this year, maybe a little bit later than that, maybe like say February, that was really good. It got a little boring up until say like May. And then May was good, and now it's pretty good now. But the best time to trade it as a trader would have been, say, from the dump through probably like October of 22. Those were very good days to trade, because to short especially. But there's some good longs in there too. The length of these candles is going to determine volatility. And if I were to bring up ADX, I'd be willing to bet that sucker. Yeah, see here. Okay, so I'll show you this. Your ADX, we looked at this yesterday. This is volatility, right? Volatility was low from here to here. You had some high volatility. We'll mark out this will be a low to low. And this will be like a low. And then you're very low. But I'll mark a different color for the highs in volatility. We'll make it yellow. So we've coded that yellow. Okay, and then leading up to those, by the way, is volatility. So leading up to the yellow is high volatility, right? So let's do this here. So I clean this up. So all the way leading up to the yellow, from the blue to the yellow, that's high volatility. So of course you had the COVID crash. That's kind of I made a lot of money in COVID crash. That COVID crash, I was actually I was out visiting my sister. She was going to have a baby. At that time, she lived in North Carolina. And so she didn't have, like, my parents couldn't get out there until like right at the due date. And she was concerned if the baby came early. So I, we're out there. And I remember I was trading during the COVID crash in the middle of the morning. Just bombing, making money on this. It was crazy. Just longing the dollar, right? It was beautiful. It was such easy money during the COVID crash, right? And then a lot of easy money at this time in trading, especially right as the S&P started to break. So, is it good for markets? Well, maybe not so much. I don't know. What's coming may not be good, quote unquote, for markets. But guess what? What we really need, is it good for markets in the long term? I would say yes. What we need is the system we've had so much malformation of capital due to money being free. Due to quote unquote money being, nothing's free, but we had 0% interest rates for like 12 years practically. If you average it out, even when they were hiking the rates during Trump's term, if you average it out, we were down like 0.3%. I mean, that makes money very cheap. And what that does is that allows interests to funnel money into their own companies to kind of push companies into profitability that have no business being profitable. ESG investments with cars that really cost $1 million each to make, but they're given carbon credits and, things that have no business being in business at this point. I got no problem with ESG, or not ESG itself, but I got no problem with electric cars. Let's say that. But as long as those electric cars are profitable, right? And as long as they're not destroying the environment, and as long as you're not using little kids in Africa to get the cobalt, you get like a good battery system that that lasts longer, and it's a lot lighter. And when you're done with the battery, you don't have to dispose of it and cause a lot of toxicity to the environment. And you can, get the materials in a safe way that doesn't involve children losing their limbs. I might be interested in electric cars, but it's just we're not there. And so basically, right now, businesses like that, where the model is reliant on the ability to push cheap money into the stock to keep the stock inflated, and the ability to push cheap money to subsidize the production of your product, when in reality your product, no product should ever require a subsidy, period. If you have a good product, it's profitable, then the money makes itself. It's called the market, and what we need is that. And so what has happened here what you see right here from 2008, basically actually 09, this big gargantuan move up is like that. That's what happens to zero interest rates. Like, you have the market that's okay, sure, there's been some moves, but zero interest rates. And plus, you see a little bit of that here in the early 2000s after the dot-com crash. They took the rates pretty low. But this right here, this gargantuan rise, this inflation that has been hidden in the stock market, because that's where they put the inflation, that is the result of cheap money. And that cheap money needs to go away. And it has gone away temporarily. And hopefully it's permanent. We'll find out. But in the meantime, all these businesses that make up this stock market, the ones that I just named that really should not exist, that are not profitable, they're zombie institutions, those need to break. And so if we go through something that causes the market to break those, I'm going to tell you, people are going to lose their jobs. The economy is going to go through some problems. But right now, we have some parasites that are attached to our economy, making money off of this system. And those parasites are causing a lot of problems around the world. And I'm not going to say, because there's a lot of different parasites, but some of those parasites are in the news a lot lately. And so basically what we need is for that problem to go away, and a crashing of the market, and an enema to get rid of all these companies that are making these people money. We need that. So is it good for market? I would say,
yeah, man, it's good because you can make money in the volatility.
Von Naya, money in the volatility, and the markets are going to get cleaned up. Von Naya says, okay, we can take care of that. Von Naya, I can, you can either create a new username and email, or I can delete your data and you can start fresh. So Von Naya, let me see. Did you send us an email? Go ahead and go to the website, go to contact us. Send us an email with your email address. Say, hey, this is my email address. How do I get started again? And we'll take care of you, no problem. And I think I know who you are and how to find you. So if I do that, I'll find you first. All right. Von Naya wants to come back. So, okay. Yeah. Von Naya, hit us up and contact us. Let me see if I can find you really quick. And because we're going to go right now. What I'm going to do is I'm going to throw the QR code up there. V, go ahead and take us over to the private show. Give us that send off, and I'm going to help Von Naya out.
Absolutely. Hey, listen, guys, here's the deal. Join us. Don't sit on the sidelines wondering what's going on in the world. Don't be a victim of circumstance. Look, it's the markets. It's through the markets that your lives are affected. Whether you like it or not, it's through the markets that your lives are affected. At least learn how the damn thing works so you can profit from it. Join us, algofactory.tech, algofactory.tech. Trade your job, upgrade your life. And that being said, Cowboy, let's get into the private room.
Von Naya, I found you, partner. We'll get you figured out. Von Naya says, heck yeah, I want back in. All right, cool. We're out of here.